Are you thinking about a Roth conversion this year? Well, before you do that, I want you to think twice about that. And here to tell you the reasons why is Jae Oh, author of Maximize Your Medicare. Jay, welcome.
Thanks for having me, Bob.
Pleasure.
So Roth conversion is a very popular topic in financial planning. And there is a certain logic to it that I can certainly understand, which is that the pandemic has increased the amount of government indebtedness, that the only possible logical solution would be higher tax rates in the future. Logic being that Roth conversion means paying tax today in order to avoid the capital gains or dividend or taxation on dividends going forward. And while that's not wrong, what happens is I'm not sure that the full ripple effects are being considered by the public at large. It's especially the case when persons are trying to get health insurance for themselves or for their families. Under health insurance, you can get premium subsidies from the government, which can lower your premiums, your deductibles, your out-of-pocket maximums. This is entirely possible under the Affordable Care Act. However, the fact is that when you take a Roth conversion, you are actually reporting income, taxable income in this year. And that would lower the amount of subsidy, premium subsidy, that you could be eligible for. It gets a little bit more complicated than that, Bob, which is that many people don't understand these implications until next year when they're filing their tax return, just to find out they've made an error when they've applied for these for these premium subsidies. For example, if you use healthcare.gov, or for example, if you use your state-specific exchange. So it's more sensitive. It's just one of those topics that health insurance, healthcare cost planning now involves taxes.
So just one quick question with that reduction in the APTC, is that a 1 year reduction or a permanent reduction?
It would be a 1 year. So what happens is every year you report your annual income, and then you qualify based on your household and your total taxable income, what your new premium would be. So in this next year, for example, yes, it can only hurt you for 1 year. So in other words, if you didn't take a Roth conversion in the next year, then would that reduction in APTC go away? The answer is yes.
So it strikes me that here we are in the year 2020. If you've been laid off, for instance, and you're about to have lower income, you might think that this is a good time to do a Roth conversion. You apply for an ACA plan, and then you find out next year that the premium that you thought you were paying was not the premium that you paid.
It's very, very true, Bob, which is that too frequently I witness persons who, and after the fact, what has happened is they've misreported their taxable income through healthcare.gov. And as a result, when this happens and you receive too large a discount, too large an APTC, you end up having to pay it back the next time you file taxes.
So the other reason people should give Roth IRA conversions a second look is the possibility of it affecting their Medicare surcharges or IRMA.
Oh, absolutely. In a similar light, in a similar fashion. The issue is that you're going to be reporting higher modified adjusted gross income for that particular year. And then in 2 years, what will happen is that the Social Security Administration will refer back to your MAGI in order to determine your Part B premium, as well as to find out whether or not there is a Part D IRMA as well.
So it strikes me when you talk to a financial planner and they say to you that they're looking at you comprehensively, it's quite possible that they may be looking at it. You've described it in the past as an incomplete set of information, and that the onus is on you to, I think, be as well informed as your professional is.
The main thing here is, and we don't have a conclusion because that the conclusion would change from person to person and situation, no question about that. But the real principle, the idea is the fact that healthcare cost planning now involves taxes. So any topic now that affects your tax level can also affect your healthcare cost premium, whether that be Medicare or whether it be your individual or family individual plan.
Jae, thanks ever so much for sharing your knowledge and wisdom on this topic. It's quite beneficial.
Thanks for having me, Bob.
Pleasure.